In today's video, I want to share with you my 5 biggest cryptocurrency holdings and why I hold those cryptocurrencies and what my strategies are with those top coins. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that is a topic that you are interested to learn some more about, stay up to date with, then you should definitely subscribe to the Lark Davis channel. Also, if you could take a quick moment to whack on that thumbs up button just for the YouTube algorithm, that'd be much appreciated. By the way, every single week my team and I produce Wealth Mastery. This is a cryptocurrency investor report. Every single issue, you're going to get a deep dive on an altcoin, top-tier technical analysis, a step-by-step decentralized finance tutorial, trending coin analysis, airdrops, token sales, and much, much more. All of that for less than $10 a week, meaning this is the most value-packed, at the same time, the most affordable investor report on the market. There's a link down below me here where you can learn more about becoming a member today. Now let's go ahead and get into this. And I just want to make a quick note, I guess, before we do. These are just my 5 biggest coins. These are the coins that have the biggest percentage of my total wealth in them. In fact, Bitcoin is my #1 investment of everything. So that's something to keep in mind. I will be doing a top moonshots video from coins I'm invested in here in the near future. Look for it to come out probably in the coming week or so. But these are my top coins and why I am invested in them. So Bitcoin is more than 30% of my entire cryptocurrency portfolio. I guess that number would shrink a little bit if we count stocks and stuff like that, but more than 30% of my cryptocurrency portfolio. I'm massively bullish on Bitcoin long term. As I mentioned in a video I made maybe a week or two ago now, Bitcoin right now, it's not one of those coins that's going to make you super rich. If you buy Bitcoin now, it's still going to do a 10x, maybe more, maybe a 20x by the end of the decade. That would, of course, be super, super awesome. You can make a lot more money a lot quicker in altcoins these days. But what I've been doing is I'm making money in altcoins, moving money from high risk profits and putting it into low risk areas, which is why I take profits from altcoins, pile it into Bitcoin. Bitcoin's a long-term wealth asset for me. It is digital gold in my portfolio. I treat it in a similar fashion as I would a gold investment, except that Bitcoin, it's still in price discovery. And I make videos all the time about why I'm so bullish about Bitcoin, all the reasons to own Bitcoin. I've got Bitcoin way ahead of any of my cash positions, simply because holding Bitcoin, I know after 5, 10, or 20 years is going to be much better off than holding onto a giant pile of cash, which is being inflated and devalued away. So I remain mega bullish on Bitcoin, but I'm not just sitting on all of my Bitcoin. This is a really important point to point out. I like making my assets work. And I know for some people, they're not keen on that. They just want to buy Bitcoin, put it in their cold wallet and forget about it, never touch it. That's fine. I understand that. That's not what I like to do. I like to make money on my Bitcoin, preferably paid out in Bitcoin, so I get more Bitcoin. Because if I'm holding my Bitcoin for 10 years and I'm getting 6% interest on it, for example, that Bitcoin will double after about 11 years. 11 years it will double at about 6%, 6.2% interest rate. So that makes lending out your Bitcoin a very lucrative idea, even if there are risks once you start to go beyond just holding it in your hardware wallet. Now, right now, I am predominantly doing 2 things with my Bitcoin. I'm lending it out in Celsius. So I'm getting 6.2% on my first Bitcoin, and only a little more than 3% on every Bitcoin after that. So not the hottest rates if you're bringing in truckloads of Bitcoin. But if you have 1 Bitcoin or less, 6.2% is a pretty damn good rate. So without any drama. You go to DeFi, you can get some higher rates in decentralized finance, but you have to deal with big on-chain gas fees. You have to deal with smart contract hack risks and all that kind of stuff. So I've got a big chunk of Bitcoin sitting in Celsius, happily trucking away, making some passive income for me, denominated in Bitcoin. I give them Bitcoin, they give me back more Bitcoin. It's a nice win-win situation. I'm also putting some of my wrapped Bitcoin, well, technically it's TBTC now, but a Bitcoin variant on Ethereum into Yearn Finance. Now, this is a less liquid variety. TBTC is actually trading at a premium to wrapped Bitcoin right now. So that's something for you to keep in mind if you do want to take advantage of this. But it's earning 15% at this particular time. So the rates of return are pretty good on it currently. Don't have as much Bitcoin in here as maybe I should, but I'm looking for some other areas for my wrapped Bitcoin as well. A little bit more diversification. I'm exploring Badger DAO, thinking about putting some money over there. But right now, I'm just in these two places with my Bitcoin. And I think one of the important things to realize if you start getting into decentralized finance, you have to be open to chasing the yield a little bit. Rates will fall. Sometimes you need to move when the rates fall, and that's okay. That's okay. You can move with the moving rates. I often do that with my assets. Sometimes the rates fall to the point where I'm just thinking, well, I don't need to keep my assets in there right now. They're better off in my hardware wallet if I'm only getting tiny fractional percentage gains. But for 15% gains on Curve TBTC pool here on Yearn Finance, it makes sense. That's attractive. That's attractive. So I'm chasing after that right now. Let's move on to Ethereum. Again, you know I'm massively bullish on Ethereum. This is more than 20% of my cryptocurrency portfolio. So more than half of my total cryptocurrency portfolio is Bitcoin and Ethereum. So right now, I'm looking for Ethereum just to go much higher. I'm not selling my Ethereum right now. I'm just accumulating more at these levels. Again, I take that high risk altcoin money and I put it into a lower risk play, which I see Ethereum to be. I think the future of Ethereum is very bright, even if right now Ethereum is definitely struggling with some growing pains in terms of the high fees on chain right now. Other blockchains are definitely capitalizing on Ethereum's high fee situation at the moment, but the mechanics of Ethereum, the economics of Ethereum are very, very bullish. We have EIP 1559 burning truckloads of Ethereum. We have staking rates, which are looking very attractive. We have the complete switch of the economic incentives, of course, when we switch from a proof of work economy over to a proof of stake economy. So lots of reasons to be very, very bullish on Ethereum moving forward. This is another long-term asset for me. If Ethereum is as successful as I believe it's going to be, then I'll just keep adding to my Ethereum bag. And in the future, what will I do with all that Ethereum? Just take it and stake it and enjoy the passive income from that Ethereum. So long-term plan there. Currently, there's a few different ways which I'm earning on my Ethereum as well. Also, again, putting some of my Ethereum into Celsius. I like to diversify my holdings around a little bit and not put everything into one place. So currently Celsius, I'm earning 5.35% on the first 100 Ethereum and a little over 5% on any Ethereum after that. Pretty decent rates overall, especially for a centralized lender. By the way, if you do want to join me over on Celsius, earning some passive income on your Bitcoin or your Ethereum, you can use the link down below in the description. I'll give you a $50 Bitcoin bonus for doing so. I'm also in Yearn Finance's Curve staked Ethereum pool. So Lido Finance allows you to stake your Ethereum. You can just take your Ethereum, stake it directly with them. You're going to earn around 4.8% right now. However, you can take that and then bring it over to Yearn Finance, put it in the Curve Steth pool, and right now you're earning 7.34% on that Ethereum. So that's a very good rate. This is my biggest passive income earner right now for my Ethereum. Got my 50-60% of my Ethereum currently sitting in Yearn Finance in that pool, backed up, of course, by insurance. So that takes the rate down a little bit because you do have to pay those insurance fees on top of that. But it's attractive, nevertheless. I'm also currently farming TokeMac. TokeMac's a very innovative and interesting DeFi protocol. So you can basically come in with single-sided liquidity and earn some pretty good rewards. So I'm currently staking in their ETH Genesis pool, earning 13% on my Ethereum. Now that's not paid out in Ethereum, that's paid out in the token. Still though, very attractive farm in terms of getting some pretty good rewards on Ethereum for single-sided liquidity with relatively low risk at the moment. So that's been a pretty lucrative one so far. It's only been open for a few weeks, but I've been in there basically since day one when it was available to the public. So that's been a nice little earner for my Ethereum as well. So that's Bitcoin and Ethereum, 50% plus of my entire cryptocurrency portfolio. And like I said, I don't like to let these assets just sit around. Yes, you can just sit back, relax, enjoy the ride to the moon. You don't have to be doing any of this stuff. You don't have to be lending. You don't have to be in DeFi. There's levels of risk you take with all that stuff. Personally, for me, the rewards are worth the risk. I'm taking a long-term view on these assets. I'm going to be holding them 5 or 10 years, earning 4, 5, 6% on these assets during that 5, 10-year journey, longer, right? Again, we're just talking about the foreseeable future here. That adds up to a heck of a lot of money after time. So, yeah. Now, the next one, I'm not actually counting this in my top 5 because it's dollars. It's dollars, right? But I wanted to mention this because dollars right now, you just earn such stupidly high rates of return for using dollars for farming right now. So it's about 10% of my crypto portfolio is in dollars. Basically, all of them are being put to work. I do keep a little bit just on exchange for buying the dip when those situations come in, or putting in those stink bids for, really low things in case we have a flash crash or something like that. But for the most part, my dollars are being put to work in crypto. Yes, of course, I'm putting some of those in Celsius. It's 8.88% on USDC right now. Not bad, not bad. For a centralized lender, it's a pretty decent rate. However, DeFi does get you higher rates, so Celsius is one of my, in terms of dollars, their Bitcoin rates are great, their Ethereum rates are great, their dollar rates are not as competitive, although I do have some dollars in Celsius. That being said, I've got a heck of a lot more money sitting in Anchor Protocol right now. So I've got this backed up by insurance with Nexus Mutual. It earns 19.4% interest a year, which is absurdly high rates. It's absolutely nuts. Take off 2.6% for paying the insurance. Still getting 17% a year after paying insurance on this protocol. So that's wild rates of return right there. Just set it, forget it, generate crazy amounts of wealth, basically. So I'm loving Anchor Protocol right now. It's been a very, very bullish money earner for me. It's on Terra as well, so the fees that you pay to get in and out of positions are dirt cheap. Also in Tokemax pool, so their Genesis pool, earning 20% APR on paid out in tokens. So not paid out in dollars, but paid out in tokens. Now my thesis here, I'm farming a bunch of these Tokemac tokens in the ETH pool, the USDC pool, and also the Tokemac pool. I take the rewards from the ETH and USDC pools, put them into the Tokemac pool. My thought here is that this is a very interesting DeFi protocol, and that there is a halfway decent chance that this pulls at least a 10x from here. So all of those 20% APR tokens that I'm farming now essentially end up giving me a 200% return, if of course it does actually go up 10x from here. That is the question. That is of course the question, but yeah, quite interested in that platform. Also farming over on Solana. So I've been doing a lot more of that recently. The low gas fees make it very, very attractive. There's some very competitive farms as well. Yeah, you could argue there's some potentially better rates of return on maybe even some slightly more interesting protocols over on Ethereum, but just having to pay hundreds of dollars of gas fees, or, when I see a $400 or $500 gas fee, I'm just like, man, it just hurts. It just hurts sometimes. And of course, if you want to get your funds out during a crash or something, is you want to take those coins back out and go and, buy the dip, well, you might have to pay even more because everybody else has the same idea. That's why I've moved a decent chunk of money into the Solana ecosystem. So I'm currently farming in 2 different farms over here on Solana. One of them is Mercurial Finance. This has given me over a little bit more than 21% in the UST3 pool. So this is a pool of 3 different stable coins paying out rewards in the Mercurial Finance token as well as wrapped Terra Luna token. So it's been a pretty nice pool so far. A nice little money earner. And the other one is Port Finance. So this one's, the rate fluctuates depending on the price of the Port token, but this one's been anywhere between 15 and 25% returns for the last couple of weeks. So another nice little money earner over here on the Solana blockchain. So I just wanted to mention real quick what I'm doing with my dollars, because my dollars are a big tool, constantly generating more dollars. That's how I constantly have money to buy the dips when they come, because I constantly have dollar denominated income, or I'm farming tokens that I can sell for dollars, ones that I'm bullish on for the future. I'm bullish on Tokmak, I'm bullish on Mercurial Finance, I'm bullish on Port Finance. I think that all of those have an interesting future. Farming them now, selling them at a higher market cap later. Number 4, I guess, 3 technically, we're not really counting USDs, let's say number 3. Number 3 is Elrond. Elrond, I've talked about this a lot on the channel. We talked about it, gosh, when it was a few dollars. It was a couple dollars back in the day when we started talking about it here on the channel. It's just gone insane since then, up to $270, back into price discovery. This ecosystem is about to go live. Now, Elrond's actually one that I've taken profits on multiple times. So I got my capital back out of it rather early. I've pulled out multiple Bitcoin in profits from this one. And I actually re-added a bit to my position recently. At about $140, I increased my position by about 50%. So I bought a nice little stack of Elrond there because I just had this feeling like, man, all these other layer 1 platforms are popping off, and Elrond's got so much coming up that is so bullish. It's got the Myar exchange launch. It's got their launch pad coming up. We're going to start seeing Elrond tokens coming to life very soon. KuCoin just announced that they're going to integrate support for Elrond tokens to list on their exchange. All very bullish. All very, very bullish. This is basically ETH 2.0 today. Elrond technologically, beautiful. Very, very interesting blockchain. There's been getting a lot of interest from the developer community, a lot of interest from the investor community. This is one that's still, I think, undervalued at rank 33 and a $5 billion market cap. I think we could easily see this one going up over $1,000 per coin during this market cycle. So I remain quite bullish on Elrond. Number 4, Polygon. Still have a nice big fat bag of Polygon. And this is after, again, having taken profits multiple times on it. I got my initial capital out early. I took profits on it again. I took profits on it again. Pulled again. Truckloads of Ethereum out in profits. I took quite a bit of Ethereum profits for Polygon, but I also got a couple of wrapped Bitcoin out as well. Just pulled that out. We was talking about this on the channel since it was 3 or 4 cents at the start of the year, saying Polygon's going to go. We see what's happening with Ethereum fees. We see Polygon integrating all these different decentralized finance protocols from Ethereum onto their Ethereum sidechain, which is what Polygon is. This one has been very, very bullish, and I think it still has a lot of gas left in the tank, to be honest. And I know that we're kind of cycling through our flavor of the month thing, but Polygon has managed to stay quite strong throughout that time. That's why I'm still holding on to a pretty sizable bag of Matic here. Yeah, I know it's Solana season right now. It'll be Avalanche season in October. But Polygon remains. People are still using it. The fundamentals are still very bullish. We have lots of users, lots of transactions, lots of DeFi protocols still building on Polygon, lots of games building on Polygon, lots going on there. So I'm staking this one. Well, actually, I'm technically lending. I'm not staking it. I'm lending this one in, surprise, surprise, Celsius. Putting it in Celsius right now, the rates are actually really good. It's super easy to do. There's no wait time to get your tokens back out. I did have it in Bancor for a while. It was pretty good at the start, but the rates fell pretty quickly and the gas fees to get out of Bancor were pretty crushing. So I just decided I gotta put this somewhere where I don't have to pay these killer gas fees, which eat into so much of the profits that I made from staking it in the first place on these platforms. So that's why I decided to put it over into Celsius as well. And the final coin, Polka Dot. This is number 5 in my portfolio. By the way, for Elrond, it's about 6%, Polygon about 5%, and Polka Dot's about 4% of my portfolio right now, although I should have bought some more Polka Dot for sure. Polka Dot, holy cow, man. Just made a video on why I am so bullish on the entire Polka Dot ecosystem. Look at how successful the parachain auctions have been. Look at how much money people made backing these parachains. Anybody who backed Moonriver made an absolute minimum of 10x. A lot of people made 20, 30, 40, 50, 100x off of backing that particular parachain auction. Other parachain auctions also made great returns for investors. I suspect that we're going to see a lot of price action for Polka Dot. I think this is a very high quality blockchain. I think this is a blockchain that has seen incredible commitment from investors, and that we're going to see this be a big money maker when the auctions come out. So when we do have parachain auctions, I will take some of my Polka Dot and put it into some of the high quality ones like Moonbeam. That being said, until that happens, I'm making some pretty crazy damn passive income right now with Polka Dot as well. Polka Dot, been talking about this on the channel since it was $3. So it's had some pretty nice returns since then. And yeah, it's okay, it's only up 10x, but it started off at a pretty big market cap, but it's up quite a bit since then. I think this is going to go to $100. This will be a 3-digit coin in the future. And while I am waiting for parachain auctions to come out, I'm currently staking my Polka Dot on Kraken Exchange and on BINANCE Exchange. So it's earning about 12% right now, which is pretty damn good rewards, paid out every few days on Kraken at the end of staking periods over on Binance. So just accumulating more Polka Dot in anticipation of those parachain auction launches coming up. Very, very bullish on Polka Dot. Anyway, those are just my top 5 coins, top 6 if you include USDC, which I think is important to talk about because stable coin farming is pretty damn awesome and profitable. Anyway, your question for today. What are your top 5 coins in your portfolio? Let me know down below in the comment section. Very curious to see what you guys are holding. Thank you so much for watching today's video, and peace out till next time.